Welcome to Beyond Investments with your host, Seth Leishman of Ostrofe Financial Consultants. Information provided is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but its accuracy and completeness are not guaranteed. Neither LPL Financial nor the hosts of this show or accept any liability for the use of the information discussed. Consult with a qualified financial, legal, or tax professional prior to taking any action. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Ostrofe Financial Consultants, a registered investment advisor and separate entity from LPL Financial. Today's guest, Rick Fisher, is a financial advisor with Ostrofe Financial Consultants, National Planning member SIPC. And now, Beyond Investments, here's your host, Seth Leishman.
Good morning and welcome to Beyond Investments here on News Talk KNCO, AM 830, here within the offices of Ostrofe Financial.
Worldwide headquarters.
Worldwide headquarters, there you go. Yes.
Rush Limbaugh used to say that here in the
right.
worldwide headquarters of the EIB network.
Of the EIB network. No gold microphone here, though.
No. This, well, it's not plastic. It's
no.
metal.
They're nice. Sure.
It's not my microphone.
They're Shure microphones.
Yeah.
Yes, very nice. Welcome to the show today. Rick Fisher and Seth Leishman here from Ostrofe Financial. Today, we're going to pick up from where we left off.
Right, there's not a lot left, but there's some.
Not too much left, but we're going to talk about some retirement planning things.
Mm-hmm.
And we're going to, that'll be part of the day today. We also going to, I'm giving it away a little early.
Okay.
For what we're going to talk about, of course, here. So a little bit of spoiler alert. We're also going to talk about treasury bills.
Mm-hmm.
So we're going to talk a little bit about treasury bills as they become a little more attractive.
Especially in the short term.
In the short term. I mean, better than they're more attractive from an investor perspective than they've been in probably 15 years or more. So we'll dive into some of that as well. But first, what do you want to do? We're going to dive into some trivia. You got something for us today?
I do.
Okay. Give us some.
We'll start with financial trivia because this is a financial show.
Yes.
Year 2000.
Oh, January. So January of 2000. We kind of know where we're going with this one. Yeah.
It's impossible to pay too much for a good stock. A leading investor tells the Wall Street Journal with a straight face.
Oh, wow.
Quote, it's a new order. It's a new world order, said Robert Forlick, vice chairman and chief investment strategist at Kemper Funds. And they're no longer. They got absorbed by somebody, I'm sure.
I'm sure.
He says investors should own Cisco Systems, Motorola, and Intel at any price and do not worry about the valuation. Quote, we see people discard all the right companies with all the right people with the right vision because their stock price is too high. That's the worst mistake an investor can make. The people who have missed the bull market are the people who have been on the sidelines trying to figure out how to value these things as opposed to getting into the market. Quote, they're also the people who missed the destruction of the overvalued stocks that began just weeks later after Froelic's remarks.
Yes.
Wow, that is bold.
It's a little, and a little poor timing. Hindsight 2020 being what it is.
It's I was in business at that time, and I've got so many stories about people that they were in retirement accounts and they had Cisco Systems, and they had made a killing, and I told them diversify, and they didn't listen. But I think the lesson I took out of that is Peter Lynch, the famous manager of Fidelity Magellan Fund, which was the 800-pound gorilla at the time.
Oh, definitely was.
And he said about valuations, he says, I'm sorry, stocks they can't last forever at 90 PEs. Something's got to happen. And usually the price is going to come down.
That's right.
That's a lot of expectation. So that's why when I see PEs, they're in the 40 or 50.
Oh, it just feels pricey.
Exactly. I think at heart, I'm a value investor, I think, at the end of the day.
Definitely.
Anyways, 1956, more than a half century as a private company, the Ford Motor Company goes public when the Ford Foundation sells 10.2 million shares at $64.50 a share. The largest IPO then on record, the offering puts 22% of Henry Ford's company into public hands.
Wow.
The family still has got a lot of control, though.
A lot of control, though, still,
78%.
At that point, yeah.
Moving on to sports. On this day in sports, 1938. You probably never heard of this guy, but he's one of my favorites. Pitcher Grover Cleveland Alexander is elected to the Baseball Hall of Fame.
Oh.
And moving on, so 1950. Here's something. Tell me if this will ever happen again.
Okay.
1950. Indians pitcher, star pitcher, by the way, Bob Feller.
Oh, yes, of course.
He had after a 15-14 season, he was older at this point, takes a $20,000 pay cut to $45,000, so like a third.
Holy cow.
Pay cut is Feller's own suggestion.
Really?
Figuring, I'm a 20-game winner. I'm, Cy Young type kind of guy. And if I barely make 500, yes, I deserve a pay cut. Do you think that would happen with any of today's players?
No.
Because their attorneys wouldn't let them.
That's right. Would never happen.
Their managers and the agents would never let them.
Bob Feller. What a great pitcher.
Oh, yeah, absolutely.
Power pitcher.
Yep.
Half and partially blind. Very poor eyesight.
Huh. Well, that's probably, he didn't have very good control. He struck out a lot of people, but he
Struck out
walked
a lot of
people.
people. But he famous story from the documentary called Fastball.
Right.
He talked about how everybody thought that he had a very angry face when he would look in towards the catcher.
Trying to figure out the signs.
And he said, everybody thought I was just like really angry because I would kind of squint
Right.
and I would kind of struggle. I was just had this weird look on my face. And he goes, I couldn't see the sign very well, and all I was doing was trying to see it better.
Right.
But I got this reputation for having an angry face.
Not that he threw too many curveballs, but
Not that I threw too many, but yeah.
Okay, 1951. This is fascinating. I didn't know this. 1951, NFL rules that tackles, guards, and centers are ineligible for the forward pass. So before 1951, everyone was eligible.
And all those.
Man.
Oh wow, it would kind of still be fun. It would kind of be fun to go back to that.
It kind of would be.
Wouldn't it be?
Yeah.
I mean, wouldn't it be great to see a center catch a touchdown pass?
A 360-pound center and watch him, kind of try to run and try people carrying 5 people on his back.
That's right. That's right.
Anyways, we should have an exhibition game, Sean. Let's go back to the old rules.
Old rules, yes.
Like, you'd have to have the modern day equipment. We're not saying go back to
yes. I mean, I gotta go leather helmets or something,
1996, baseball owners unanimously approved the interleague play in 1997, and I'm still not happy about it. Never been a fan of interleague play.
No?
No.
It's fun, though, when,
Now it's gotten too far, because I think the reason I was against it is because I knew this would happen, that they're just going to make it. It used to be just a little bit, it was just a few games, but now if you're not playing your division rivals more than 50% of the time,
yeah,
I don't know. I'll get off my high horse.
It's fun though when you can go to a home game and pick up and watch a team that you just hardly ever see.
I get it. I understand. I resigned myself to that's the way it is. I just said I don't like it.
Yep.
Moving on to music trivia.
Yes.
2016, the Eagles guitarist Glenn Frey died at the age of 67 in New York City from complications arising from rheumatoid arthritis, colitis, and pneumonia. Obviously, he was a co-founder of the Eagles with Don Henley, and had quite a few number one hits on his own. 1975, I put this out there just for people of my generation because we remember this song, and even he's kind of a guilty pleasure. Barry Manilow scored his first number 1 single with Mandy.
Yes.
Yeah. So 1965, the Rolling Stones recorded The Last Time and Play with Fire in Hollywood, California. Those are two songs I like of theirs. You probably have never heard them.
Mm-mm.
But that leads something. We might be doing something a little bit different and introducing you to some of this old stuff.
Okay.
Since your father and mother failed miserably.
Yes, they did.
1964, the Beatles made their U.S. chart debut when I Want to Hold Your Hand entered the charts at number 45. Just 10 days after its release, making it the fastest breaking and the fastest selling single in Capitol Records history. It went on to spend 7 weeks at the number 1 position. Looking at just standard everyday history.
Yes.
On this day in 1919, again, January 18th, in Paris, France. What do you think happened? January 18th, Paris, France.
I don't know.
Some of the most powerful people in the world met to begin the long, complicated negotiations that would officially mark the end of the First World War.
Oh, very nice. Yes.
Ended up in the Versailles Treaty in June of that year.
Okay.
And if you like to, have you been to Hawaii?
I've never been.
Oh, okay. Do you want to go to Hawaii?
It'd be nice.
Okay. Well, in 1778, you can because Captain Cook reached Hawaii.
Ah, very good.
English explorer Captain James Cook, not James Kirk, James Cook, becomes the first European to travel to the Hawaiian Islands when he sails past the island of Oahu. 2 days later, he landed at Waimea on the island of Kauai and named the island group the Sandwich Islands. And that's it for trivia.
All righty. Well, we're going to come back. We're going to talk about some retirement planning as well as a little concept around treasury bills.
And we got some comments on the economy and
various things today to be looking at here on this beautiful Nevada County day.
But I hear it's not going to be beautiful for long. It's supposed to snow tonight. That's what Dave told
tonight
me.
Being Wednesday, we're recording this on Wednesday.
Exactly.
So, but
it looks like the next 2 weeks is supposed to be sunny skies,
but then nice for the next couple of weeks.
It was supposed to be raining today, so go figure.
We'll see how it goes. All righty. Well, we'll be right back. You're listening to Beyond Investments here on News Talk, KNCO AM 830.
Today's guest, Rick Fisher, is a financial advisor with Ostrofe Financial Consultants, National Planning Member SIPC.
Good morning and welcome back. Beyond Investments here on News Talk KNCO. With the last 2/3 of our show today, we're going to kind of cover a couple different topics. Actually.
We'll kind of finish what we talked about last week. So last time, just an update, we talked about, since we have a lot of people are starting to retire or the baby boomers are still there, and those, what was it, $10,000?
10,000 people
a day are retiring.
Yeah.
One thing I did see is that actually the average retirement age has gone up quite a bit since.
Yes.
It used to be around a little over 65, which is, and now it's bumped up to 68.
Wow. Yeah. That's quite a bit of a bump.
I have a feeling that's a trend that's going to probably continue as long as we're in this bear market.
Yeah.
And you never know. I have a feeling that Congress at some point is going to mess with those numbers and push it out. I don't see how they can't.
I think it's Social Security and Medicare type things. Yeah,
I think so. That's why I'm not, I'm 60 years old. I have no idea. I've got to kind of really wait and see. But so when you're thinking about retirement, not only is, can you afford it, but how do you want to spend your time?
Yeah,
I know over the years I've had clients say, I'm burnt out, especially if they're self-employed.
Yeah.
I'm kind of done. I don't want to do this anymore. First can I retire and not do anything?
That's right.
And, sometimes they can, and sometimes it's iffy, especially if they want to retire on the younger side.
That's right.
And so I said, well, what would you do if you weren't working? Is there something that you would do that you would find enjoyable?
Yeah.
And you still could get paid? And I had, was one of our clients, I'm not going to name their name.
Of course. But
they were in a very kind of high stress job and had been for many years. And they were just kind of done. And I said, well, what are your interests? He says, well, I love the theater.
Yeah.
And I said, well, have you ever thought of, I love sports. I love the theater. I said, well, have you ever thought of maybe, being an usher at, when she meant theater, she meant like plays and orchestras, not movie theater, of course.
Yes, of course.
And, she kind of looked at me and said, I hadn't thought about that. Or some people love gardening. Well, have you thought working in at a nursery?
Yeah.
Or if you love wine like my wife and I do, would you want to work in a winery or work in a tasting room? Where, you're not going to get rich off of it, but a couple of things. When you're working, you're generally not spending money.
That's right.
And if you are, you're spending maybe the money you made that day, so you're not really hurting anything.
Correct.
Plus, you're getting out there and being active, engaging your mind.
Engaging body.
Right.
There's a big difference when, if you retire and then you just don't go anywhere, don't do anything. You're slowing, you slow down way. It's just, doesn't usually lead to good outcomes. You want to stay engaged in something. And
I would, a lot of my clients would say, or our clients, they would say, yeah, but who's going to hire, a 60, 65, 70-year-old? Said there was a time where that would be a valid concern.
True.
But over the last, 10, 15 years, and now more than ever, it's that work ethic that a lot of employers are not seeing that you do get out of the baby boomers.
Yeah.
And as long and it's saying if they're 65 and they're already covered by Medicare, then you've got someone who's reliable, seasoned veteran. They understand how work goes, and they have that sense of pride, and so those I'm too old doesn't always
apply. I mean, maybe it applies to if you're, up on a ladder swinging up on a crane swinging a hammer. Okay.
Yes.
I get it. Yes. But in a ton of professions and a lot of things that you can do, age is not a detriment.
No, it isn't. These gray hairs give you some credibility.
They do.
And in my case, I need all I can get, but
I got plenty too over
yeah.
here.
And another thing, from a mechanically.
Yes.
Okay. So most clients, they either get a paycheck or a 1099 or something, and they're someone's automatically putting money into a 401k, and they see this asset building over time.
Right.
Now it's time to take that money out. So a couple of times we talked about this last time, asset allocation needs to be tweaked and your mindset.
Yeah.
And then say, well, okay, my first year of retirement, Rick, you said that I should have, 1 to 2 years or 6 months, whatever I feel good in cash. So it's not at market risk. And this year would have been a great year to illustrate that.
Yeah.
But I don't know. Do I trust myself if I had a year's worth of cash sitting in my savings account?
Right.
It says, well, that's where you might want to keep it, at a third party and
Yeah.
have a systematic withdrawal where it's just like that paycheck that came to you every 2 weeks through ACH. Now it's your retirement plan giving you that same or a similar amount.
That's right.
So those things don't change, because you're right. If I saw $30,000, $40,000, $50,000 in a savings account, I might go buy a truck.
There could be temptations.
a temptation.
Yeah.
But if you just see enough where it keeps you comfortable, you get enough for emergencies, but not enough to really draw down on. That's just, again, it's a psychological strategy.
It's a lot around mentality.
Yes.
Retirement is a lot of mental adjusting that happens, and I think the people who have the most success and find the most success and happiness in retirement work on that mental part of it too. Mm-hmm. That's got to be a major part of it, definitely. Versus not just make sure, do I have enough money and do I have my house, do I have somewhere to live, or some of the physical parts of retirement. I'm not going to work every day. A huge component is the mental part of it, of how are you staying engaged? What are you doing? Are you processing information? All of that good stuff.
And another thing I want to talk about. So for those that still have pensions.
Yes.
And I got some, well, I wouldn't say frightening, concerning news about state pensions. So
concerning or disturbing.
Yeah. Company pensions, the big companies have pretty much gotten rid of them.
Yeah.
It's really government entities that have pensions.
Yep.
But if you work for the federal government, or actually the state government, it's a sad state for pensions.
Uh-oh.
So through 2022, only 7 U.S. states and the District of Columbia have state pension funds that are 90% or more funded.
Wow. So 90% or more funded pensions.
Only 8.
Only
7
8
states in the
total.
district. Of course, the District of Columbia is, because that's where all the politicians are.
Yeah, of course. They'll fund their own retirements.
Of course.
Of course.
No, we fund their retirement.
Correct.
Yeah.
We fund. They make sure it gets done.
Exactly.
Wow.
Of the remaining 43 states, only 21 are more than 75% funded.
Ooh.
20 are funded more than 50%, between 50 and 75.
Between 50 and 75. Okay.
While Illinois and Kentucky have funded ratios that are 50% or below.
Ouch.
So, if you are a state worker, or if you have a company that has a pension, it's ask your HR department, what's the state of my pension?
Yeah, what's our funding level?
Yeah, because if they offer you an early buyout, or if you were planning to stay a few years longer, you were thinking of extending it, you might want to see how, is the pension healthy enough that should I get my money while the getting's good?
Ah, yes, very good. Yep, very good mentality. Very good illustration.
Yeah, because I remember we had a client who's passed away, unfortunately, but he was an airline pilot.
Yeah.
And he retired probably 25, 30 years ago.
Yeah.
And he got a traditional nice pension, about 80% of his original pension. He had friends that hung on for another 5, 10 years.
Yeah.
Like 30%.
Ooh.
The
major hit.
Yeah,
a major
hit. So he was really glad that he retired when he did.
When he did, yeah.
Those pensions, they say it's a guaranteed payment. It is, but you need to know if they can make it.
Can they actually make it?
In the federal government, they can print money, but
you never know.
That is true.
You just don't know.
Now, obviously, 2022 was a tough year.
Yes.
And we've been talking months about, are we going to go into a recession, another recession?
Yeah.
I got a little bit of good news.
Okay, very good. Let's look at this.
So last week, the first week of the year, S&P 500 gained 1.37% in the first 5 trading days of the year.
Okay.
That's double what it historically is.
Oh, very good.
And anytime it's over 1% for the first 5 days, there's a 79% chance that we'll have an annual return of 14%.
Wow. No predictions here.
No predictions. Just saying we're off to a good start. Unfortunately, this week.
Although this week's already almost given it all back.
Yeah, I don't.
Pretty close.
It's
a chunk back. A chunk back.
And the reason is it looks like some economic news showing recession may come. A lot of layoffs in the financial sector.
Yeah.
Consumer spending is starting to weaken.
Yep.
Fortunately, the inflation rate is starting to tick down. Well, is slowing.
Slowly.
I've been good news, bad news.
Inflation's been stubborn to come down.
And construction costs are finally starting to come down a little bit.
And that's a big one. You know, if you could see construction costs come down, because they were sky high for several years.
Mm-hmm.
I mean, and they were ramping up really, really quickly too. So now granted, I mean, a lot of, I would assume it's probably driven a lot by the fact that interest rates are so high. So building is slowed down.
Sure.
There's a lot less demand. People aren't refinancing their house, pulling out $50,000 to redo the kitchen.
Right.
Because if you got a 3.5% mortgage, why would you refinance at 7% to do a remodel? Right. Yeah. So some of those demand for the home improvement, addition, build, et cetera, is all kind of slowed way down.
Absolutely.
We've got a client who's a appraiser. Does appraisals,
mm-hmm.
right? And so big portion, extremely busy for the last 10 years.
Right.
The number of purchases and refinances that require an appraisal,
mm-hmm.
He was super busy all the time.
Mm-hmm.
At least 80% slowdown in the last 6 months.
Oh, I could imagine, yes.
And so major drop off in the number of requested appraisals, mostly driven by the fact that there's just refinances have slowed down to a halt and to almost essentially a zero. They really just kind of dropped off the cliff there. But
so the last thing I wanted to mention.
Let's bring up, yeah.
Yeah. So we've had clients inquire about short-term money.
Yes.
Just sitting in the bank. It's not really.
Don't need it right now, but I don't want to lock it up for a long time.
Right.
I don't want to be stuck for 5 years or something, something like that.
But I don't necessarily want to pull it out and look online and find bank accounts. So one of the things we talked about is, short-term T-bills.
Yes, treasury bills, T-bills.
And we have found through experience that when you just do that with explaining what it is, there can be some confusion.
There can be some confusion. I agree with that.
And so I thought we'd do like a little illustration.
Yes.
So let's say this is in an environment where interest rates do not move.
Yes.
Okay. And then we'll add that to the mix.
Yes. We're going to say under the assumption they stay the same for the next year.
Yes. So, but let's say you don't know that. So you're gonna buy a T-bill. I just want to buy one for 3 months.
For 3 months, yes.
Okay.
I don't want to lock it up for longer than that.
Okay. So I want to put $10,000 into a 3-month treasury. So let's say at the market rate, that's going to cost you $9,900.
Right.
And then when it matures 3 months later,
3 months from now,
they give you $10,000.
So you got $100 worth of interest.
$100 worth of interest, okay?
In 3 months.
In 3 months. If you do that every 3 months, so you've done it 4 times now.
Yep.
You've used that same $10,000.
Yes.
And each time you buy that bond for $9,900.
Yep.
So every cycle you're getting $100.
You're getting $100.
And so over a year you're getting $400.
Which is
4% of the 10,000
of the original of the 10,000, the same 10,000.
Exactly. So you're using that same 10,000, and the reason you went shorter term is because if you think interest rates are going up,
yes.
Well, when it comes up, maybe interest rates will be higher,
and I renew at a higher rate.
Yes. Obviously, there's no guarantees.
No, who knows what's going to happen?
And in that 30-day or 90-day period,
yep.
I mean, T-bills trade every day.
Yeah, you can buy and sell them. It's not what we would call. There's a lot more money out there that are not new issuance T-bills.
Right.
You're buying. You're buying a 3-month T-bill. The interesting thing about a 3-month T-bill is you could be buying the last 3 months of a T-bill that was from 10 years ago. You could be buying a brand new one.
Right.
You could be. So there's any number of modifications, but you're buying for your $9,900. At what is an annualized 4% rate,
right?
You're gonna put in 10,000, which really you put in 9,900, and then you get 10,000.
Exactly.
So you're going to make your, 4% annualized, assuming interest rates don't change.
Right. Now, if you bought that, let's say you put in the $9,900 and you get the, and then 3 days later you want the cash.
Yes.
You can get a bid on that, and it might be higher, it might be lower, depending what interest rates and demand are doing that day.
That's right.
So there is no guarantee,
inside of the time frame.
It's just that I will get my $10,000 at the end of the term.
Yes.
And then I can roll it over, I can go spend it, I can do whatever I want.
That's right. Yes.
So I thought maybe those mechanics might make it a little bit easier, which, CD is just the opposite. You give them 10,000, and as long as you keep it in there, you get that interest, and then they post it at the end.
That's right. Yes, correct. Yeah. T-bills work a little bit differently.
Yeah.
Same mechanics at the end of the day. You get a fixed amount back at the end and some interest.
Exactly.
What is the equivalent of some interest.
Right.
But it works out a little slightly different because you buy them at a discount, meaning you get. Yeah. Anyway, so I think it's a great tool because some of these treasury bills, a T-bill on an annualized rate, right? They're paying pretty good. We finally have gotten rates higher.
4.3, 4.4, 4.5, around there.
We're in the 4 to 4, slightly above 4% on a 3-month process there, which is pretty good compared to what it was just 2 years ago.
Right.
A 3-month T-bill paid less than 1%. 2 years ago. So to see rates be as high as they are now, they are more attractive as an investor when we look at them as part of an allocation. They were almost disregarded in many ways for a long time because the rates were so low.
Yes.
They just were not attractive. So, great. Appreciate the time today and appreciate you listeners out there listening in. As always, we want to encourage listeners, you can go to our website at ostrofinancial.com. You can download or stream this show as well as some previous shows as well. And as always, if you'd like to learn more about what we do, give us a call at 273-4425. Come experience the difference when you think beyond investments.
Information provided is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but its accuracy and completeness are not guaranteed. Neither LPL Financial nor the hosts of this show or accept any liability for the use of the information discussed. Consult with a qualified financial, legal, or tax professional prior to taking any action. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Ostrofe Financial Consultants, a registered investment advisor and separate entity from LPL Financial.